I made a mistake in my investing. And when I make a mistake in investing, I want to learn from it. And I want to educate others who may be in the investing world and may have the same mistake. So the mistake that I made was I made a large bet on the wrong asset class. And by doing so, I have not sold this investment, but I'm going to end up waiting for a while when this asset class turns around and moves in the right direction. Okay. So what I mean by that is these I listed out four separate what I consider asset classes. Asset class number one is 401k. Asset class number two is like exchange traded funds. We've talked about TQQ and SQQQ, right? And there's other examples that fall inside this organization or this group. And the third one is stocks, being Ford, Tesla, and Disney, or Intel, Nvidia, Amazon. You pick it. Major companies. And the fourth one would be startups, like a brand new company with maybe a $4 or $5 stock that has found the cure to cancer, and their stock is going to bounce from $3 a share to $20 a share within 3 days. And it just does happen, and you can make a lot of money in that regard. So I was thinking about how to tie an analogy around asset classes and where to put your money so you can control your risk. It's called risk allocation and risk management. When investing, that's really all we're doing is risk management and risk allocation. So you have to understand when you first, so this video I'm making here is probably the most important video that you should actually watch before you start investing, because this will help you to dictate where you spend your money and how much money you should spend and invest in each asset class, knowing your risk and your reward expectation. So I got an analogy for you. And the analogy would be you have four different classifications of animals that you have to herd. And if your goal is to manage, if you want to manage to get a bunch of, let's say, turtles from this block to this block, okay? And you're paid by how fast you can get the group of turtles from here to here without losing any turtles, right? Or without killing any cowboys along the way, right? The same thing goes with the next asset class, being cattle. And I say, oh, I have a group of cattle here, and I want to move these cattle from here to here, right? And the faster they get there safely, the more you get paid. The next asset class would be like stocks, Tesla, Ford, Disney, Intel, Nvidia, you name it. How fast can you move them from here to here? And then the fourth asset class is like brand new startup companies that are $4 a share that may go to $50 a share within a short period of time. They may go crazy high. They might go crazy. I'm glad she found that on the web. So as you increase your asset class, dictates how fast your investment can change on you. So if your goal is to move a group of turtles from here to here, it's pretty easy. You're guaranteed that more than likely in time, it may take a long time to get from point A to point B without many turtles dying in the process or running off. Oh, we lost 15 turtles. They ran off one way and we can't get them back. And therefore, no, more than likely with turtles, you're never gonna walk away with zero money left in your pocket. It may take a long time for this money to mature and to bring value to you, right? But it's what majority of people do. This is investing in large corporate companies and blah blah blah. You're gonna get your money back, and most people agree with that. The next asset class that I'm trying to educate you on is um, uh, inverted pairs or investing pairs, where you have, you know, if one's going up, one's going down. But overall, what happens in the market? The market goes up and goes down. Excuse me. The market. God bless. Okay, sorry. The market goes up and goes down. This is one thing we know is for sure. And what we know, what we can be sure is the market is going to rise and it is going to fall. And it's pretty, if you know the right signs, which I help, which I try to show you with some of my tools, my indications, well, it lets you know which way the market's going to go. So this is a pretty easy asset class to track. It's general economics. It's general feel of the market and which direction the herd is going to go. Move it down to individual stocks, and this is where I made my mistake. Well, actually, maybe my mistake more on level 4. But stocks and like Tesla and Ford, these stocks are pretty predictable too, except for the fact that in a day, in a single day, let's say Ford is trading at $14 a share, and then the president of Ford comes on and realizes that, oh my gosh, the batteries we're using for our new cars are not going to perform the way we thought. In fact, they're catching fire, so we have to shut down the entire product line. And when this happens in a single day, Ford that trades at $14 a share could fall to $9 a share within 3 hours. It can drastically change direction because of the actions of the individual company or the CEO. I jokingly say that, let's say Tesla, let's say that Elon Musk turned out to be an alien and he's going to wait for his mothership to come collecting, and he's saying this in public, well, that stock's going to tank. And if you're invested in that stock, and if you're not staring at the screen, if you're not staring at, yeah, it's just going to fall, right? Or maybe it may go up because, hey, maybe it realizes that UFOs and whatnot and extraterrestrials are a real thing, and that may make his stock go crazy high. But you get my point. If the owner of a Ford company goes out and he gets found with the 3 dead hookers in his trunk, it might make his stock fall. Okay, so this is a very as we move up now. The last asset class is startup companies. Like these are companies that they just found a cure to cancer, and by finding the cure to cancer, the stock may go from $3 a share to $20 a share rapidly quick. Or the opposite could be true, that a new startup company, their drug failed testing, right, or failed to meet certain benchmarks, and it went from $12 to $3 rapidly, right? So I think about it, if you were a cowboy and you had to herd certain animals to get them to a destination from here to here, well, I tell you what, if you herd turtles, it's pretty sure you can get them slowly across the screen. Herding cattle, since cattle are prone to move in large groups, pretty predictable. Sometimes they have stampedes. Every now and then, a couple cattle might run off, but generally, you can get them to move from one side to the other side. Gazelle, they actually run in packs, and they run quickly and in one direction, depending upon how they feel and if they think something's chasing them or whatnot. But they generally move in a certain direction, right? But every now and then, shoot, the gazelle could get crazy and turn direction and run right into the waiting mouths of a predator, and you could lose it all for a period of time, right? And furthermore, the last of the most dangerous asset classes is cheetah, because cheetahs themselves are herding animals. They like to herd the animals, right? So they can eat the herd. They feed off the herd. So if you were trying to herd the cheetahs, I tell you what, it might be challenging. You might get lucky and you might get them to run off in one direction. The reason why I put this video together and why I think it's the most important probably the most important video to watch, is the fact that how much money should you put in each class? If you put 20% on your cheetahs, right, and then maybe 10% or 10% here, 20% here, there are maybe 90% here, and next to nothing here. I mean, when it comes to turtles, it's like, well, I think if we know how to track the market and know the general sentiment of what things are going, this is the class I would never really invest in. Furthermore, I don't really, I mean, if you spend only 10% of your money here, it's really fun and really rewarding when you can catch a stock off great news and ride that sucker. You can put a $100 bet and make 40 or $50 within 10 minutes easily. You can also lose that money as quickly, easily. So this is a gambling asset class. Where I strongly recommend you being is this guy. If you're trying to hit a bunt, if you're trying just to get consistent recoverable money, you want to put your money on something that you know with great certainty that we can herd this asset to make it profitable, right? So if you're grouped into an ETF, this is like a mutual fund type of thing, an ETF, where if Tesla comes out and it turns out that their cars catch on fire when they get flooded and that makes their stock market tumble, if it was tied to an ETF or a mutual fund, Tesla battery problem wouldn't cause your ETF in general to lose funds. But if you were invested singularly in a company, it would cost you huge, right? It would take you forever for when Tesla finds out that their batteries have a problem, and here's how they're going to fix the problem. Maybe 3 or 6 months later, that stock would turn around. Elon is not an alien. He's not waiting for the mothership, whatnot. It's not going to impact your bottom line. So, of all the asset classes that I try to teach and recommend, is focus hard on number one, mutual fund slash 401k safe money. Number two, ETFs or exchange traded funds where you can track the general direction of the market to find out where that's going to go and place your bet on that and avoid with a passion investing in individual stocks or companies, right? Because they're too risky. If you're trying to make a quick dollar and you think that Disney stock just took a tank, it was dropped down really low, and man, that stock looks cheap, and you buy it cheap, and then Disney's CEO turned out to be a pedophile and has been doing all kind of stupid stuff. That Disney stock that was low will go lower still. And you thought for sure that, oh, Disney's stock is low and I'm going to catch it low and ride it high. It would make sense unless the executives are doing the right thing. And God knows people make a lot of silly mistakes and cause things to go sideways. And startup companies, oh my gosh, this is your gambling class. Spend $100 here and there to see which way you think you can track a cheetah, and you might be right and make a lot of money, or you might be wrong and you might want to cut your losses quickly before you lose too much. It's a fun place, but this is the gambling realm. Tracking the cheetahs, herding the cheetahs, man. I mean, you can do it. So this is why when I talk to new investors and I say where you should spend your money, it should be in this class set right here. This TQQ, SQQ. Now, when you look at TQQQ versus SQQQ, this is a NASDAQ, the overall direction of NASDAQ. There are other inverse trading pairs that you can look at. You can look at natural gas has inverse trading pairs. You can look at gold. You can look at natural gas. You can look at, um, gosh, you name it. Any number of major funds, major groups of money, and you can either bet that it's going to go north or south, and you can easily place it on one or the other. And it's guaranteed that if one of the companies inside of the traded funds, if they go south, it's not going to pull you down completely, right? You can lose a cow or two or three, and overall, the tracking of the market will guide you one way or the other. Asset class and risk management is all about investing, right? When you understand this core concept, if I got grandma died and gave me $3,000 as part of my inheritance, how to safely place that money. Know that you have each of these classes to bet in, and by ranking their risk management and risk tolerance. I'm not sure if this video makes sense to many people, but I made a mistake. well, some with the SPAC, but I had made this mistake by playing around and chasing a cheetah. It was a startup company, and it was growing, and it went from $3 a share to $7 a share to $15 a share, and I was like, "Yeah, yeah, yeah," and I kept buying and selling, buying and selling, and buying and selling, and then when it hit a top, it stuck there, and then it fell, and fell, and fell, and fell, and it fell back from where I started investing. It went all the way up and all the way back down. Now I've got a huge sum of money, and it's tied up in a loss. And for me, or I don't want to sell for a loss. So I'm going to hold on to this thing. And I'm confident that in time, this $1,000 that I spent in this company is going to go back up. But while I'm waiting, I'm sitting there doing nothing. Most of these small startup companies, you can't sell options on. You can't make money while you wait. Most of these small startup companies are not paying a dividend. So you're not going to make a dividend while you wait. All you can do as an investor, when you've invested in the option class or the investment class of a startup company, all you can do is wait. Hope that the company can figure it out and change their management or get bought up by another company. You name it. But while you're waiting, you're not making a dime. And it is essentially trapped your assets until it happens, until they move. It might take a year, it could take 5 years, or they might get bought out and sold and whatever, and you might just break even. But while you're waiting, you can't do squat. With exchange traded funds, at least you know the market in time is going to go up and down, up and down, up and down, and you can trade options on the exchange traded funds to make money while you wait. Do not get trapped and buying a Ford stock thinking that it's going to go higher just to find out that Ford's new truck has a problem and their revenue just tanked because your investment will tank with it. And then you'll be holding Ford stock waiting for them to figure it out. You don't invest in a brand new company or not a whole lot of money on a cheetah because trying to get them to come back to the right side might take forever. I hope this video makes sense. It's been a while since I posted. I'll play it back and see if I want to keep this, and if not, I'll trade it and kill it and re-record it. So thank you so much for your time. Hope this video makes sense. Like and subscribe if you like the content, and thanks so much.